Righto, buddy miners, is lithium back? If MMS are tipping dirt in the bloody Mount Holland crusher? It must be. That must be. Is that a bloody clear signal? MMS, have a look at this. Wins the ROM contract for Mount Holland rock breakers. Look at this. Geez, that's a freaking sexy loader. Good work, MMS. Good to see people like West Farmers taking action.
Understanding how to make money is to use the right contractor.
Yeah, well done. You can tell blue chip companies, they do the right thing.
I don't think lithium's back yet, though, but, Wessy's has a balance sheet to write it out.
This could wipe out every other producer, potentially. Right, so you wouldn't believe it. We're probably talking about MinRes today. Also got, it's like, you wouldn't have picked it, would you?
No, they haven't been in the headlines.
Probably do it first, too.
Yeah,
right.
Probably put this on the
Trav, you've got an interesting Kiwi project going on with the Siren Gold Federation thing,
mate. This is right up my alley.
Yeah,
bit of hostility, bit of contested acquisition of sorts.
I like it how you said that.
Yeah,
I like it. What else we got? We got Paladin's quarterly, Westgold's got a bit of cash. IGO missed a couple, but lucky or unlucky them, however you view it. Let's start with MinRes. What have we got today? A bit of an announcement, one-pager from the company with, you'd say, a bit of a different tone to last week. Take it away and let's dissect what's going on in this, one of the biggest stories in corporate Australia that we've seen for a while, you'd say.
In
Absolutely.
WA, apparently on the East Coast, everyone's concerned with the Richard White because it's all of the gossip of the, Sydney elites, but here, mate, this is the important one.
MinRes doesn't make it on the Mamma Mia podcast, I don't think.
Actually, disappointingly, the West is like nowhere to be seen on the reporting of this. Might have something to do with the fact that MinRes is a big advertiser, but anyway.
Yeah, I saw the good friends we got at the Fin dust off the old word personality again. I think we were due one of them. Like you say, Matty, big story. I reckon this is one of the biggest ones in our world for quite some time. And yeah, we actually haven't spoken about it since last Monday, and quite a bit more water has gone under the bridge since then. So most notably, the stock price is down 25% the Friday before the news came out. So that's sort of a week and a half ago now, close to $46 now. Last time I looked, closer to $34. That's a pretty hefty drop in just a week. So I think the key talking points for us are the company announcement, like you said, today, the one-pager, the latest news, a lot of that coming out of the AFR, plus what we think is going to happen next. I think a few people might be keen to hear the uneducated or maybe partially educated thoughts we have on that topic.
I suppose interesting when you say it did drop back. Remember, it did go down to $30, and then there was all the China news, even on the back of lithium not doing too much, which saw it go back up to 50. So it's sort of, even after all this, back to where it started after the initial drop when there was the
Aussie Super was buying on the way up, and now they're selling.
Also saw actually the short position, the net short position dropped a bit over the past week or so. So it's sort of spiked up to like 12.5% of shares on issue, now closer to 10, which is kind of an interesting side note. But so we'll kick things off last week, around mid last week. Again, there was reporting done by Neil Chenoweth at the AFR. This was regarding a company called Halfway Bay Station. So it's a property just south of Queenstown in New Zealand. And there's a company of the same name. This is co-owned by Chris Ellison and Tim Roberts, who was a former board member of Mineral Resources, a 75-25% split. They allegedly bought machinery below market value from a Mineral Resources subsidiary. This transaction was approved by the former Min's chair, Peter Wade, who was involved in those earlier transactions with Far East, those allegations that was initially put forward by Neil Chenoweth Saturday a week ago. Tim Roberts came out in a statement and said, at no time was plant and equipment purchased at undervalued from a subsidiary of Mineral Resources, followed up and said, at no time did I request MinRes to supply plant and equipment at a discount. Now, part of the reason this came to light was the whistleblowing by Steve Pigozzo. This guy's the former procurement boss at MinRes. He was sacked for misconduct in 2022. MinRes followed up that sacking by suing him for contract breach. He in turn sued MinRes for unfair dismissal. And this case is sort of subject to a lot of suppression orders, so it's pretty light on details.
I think he was the whistleblower, and then the details of his whistleblowing were subject to suppression orders and have struggled to make their way to light.
I think that is right, because that was pretty widely reported at the time as well. In 2022, we saw articles in the West, in the Fin, of this guy Pagozzo leaving and having a bit of a spat with the company.
Are those court cases ongoing, or were they?
I'm not sure. It's been pretty minimally reported, to be honest. I think like Sydney Morning Herald are the only ones that are still like talking about it.
Yeah.
Wonder why.
So that kind of brings us to today's announcement. And sort of in a nutshell, you've got an update on the investigation. MinRes has been queried by the ASX as well. They said they'll address that separately and shortly. Additionally, MinRes will advise the market the conclusions that the board comes up with by November 4th, so that's 1 week. They've also engaged Herbert Smith Freemills, the previously unnamed law firm. Now, it was sort of reported by one group that these guys came into the fold late last year, although another source challenged this, saying it was only a few months ago. So there's a bit of disagreement on when they were exactly pulled in.
The interesting thing, JD, was that McGrath and Nicoll have now been like pulled in the mix too. So, clearly some forensic accounting kind of assessing like historic transactions and everything is going in.
Yeah, and they also mentioned the general counsel without actually naming them. Another detail is that Chris Ellison is on planned leave. And lastly, the board said that they're also now working to resolve inconsistencies in what's been reported by the media. So it's a sort of expansion of the investigation that's been underway. So I think the first thing that kind of stands out that we should chat about, guys, is the change in tone, the kind of change in language. There's no longer that full support for Mr. Ellison and his leadership. Those words are gone. That really stands out. Not sure if you guys had different thoughts on that matter, but just reading the relatively brief one page they come up with today, it strikes quite a different tone.
And the fact that they said by Monday, November 4th, next week, there will be effectively what the decision is going forward of, I assume mostly in regards to Mr. Ellison himself and the position within the company.
Yeah. Keep in mind that they were scheduled to do their quarterly, I can't remember what day it was, but they pushed it back to the very last day of the month. So it's now, they normally report before Pilbara. They're now reporting after on the 31st, Halloween. Then, and then shortly after that, you've got the 4th of November where this information is all due. So there's interesting confluence of sort of circumstances ahead on the timing perspective. I agree with you, JD, that the wording was different. It was probably still like, I wouldn't describe it as like as a strong position by the board. I would probably just describe it as like a reactionary position by the board, given the external pressure, both from clearly the media, but also even ASX have given them a please explain with a bunch of questions they've got to type up and now release to the ASX too.
Yeah, I'm in agreement with you there, mate. The word strong wouldn't be the first ones that come to mind reading this response. I think they've bought themselves a bit more time, but they've got the clock ticking now. They've only got 1 week to go. There was also, interestingly, no mention of, in quotation marks, private tax matters. That's how they addressed it a week ago. It's clearly not that. And that leads, on my part, to a couple more questions. Given the timing of when the board knew about these Far East related dealings, it seems like they had known for a while, which makes me sort of pose the question, why did they call it just a private tax matter last Monday, given everything that gone on? And just hoping they address that point when they come out next week and report on it. And I think, again, credit to Neil on the reporting he's done. He summarized it in another article late last week quite well, just sort of putting 2 questions forward to the board, 2 core questions, as he put it. Firstly being, when did the board find out about these events? And following that up with, why didn't they tell shareholders at the time? And, I think that's a nice and succinct way of putting the huge amount of questions that a lot of people would have forward to the board. Very keen to sort of see what they come up with on that front. But like you say, Maddie, the announcement we're kind of leading to is, what does the future hold for Chris Ellison. And this sort of ties in with an article we saw over the weekend from the Australians data room column. They floated around the idea of a circuit breaker, as they called it. And they referenced the situation that's happened at WiseTech, the Aussie tech company. Different, but, quite similar. And ultimately what they ended up doing was changing the role of their founder. The stock bounced back 12% on the day. Now, he's still at the company in a sort of consulting role, earning, I think, $1 million a year. So it's not all that bad. Mind you, the guy's worth close to $15 billion. But that circuit breaker is something that the market really liked. And you can see by the way the stock rebounded. Their stock had equally peeled off 25+% over the week. Now, when it comes to kind of potential replacements that the Australian puts forward, they've got a few interesting names. I'd love to hear what you guys kind of think. I think I've got my own views on it, but Andrew Cole, Sandeep Biswas, and Nev Power. I find all of them very much long shots. I don't know why they would put their hat in the ring here, but what do you guys kind of reckon on that point?
I wouldn't put much weight to either of them three going in to run MinRes. No.
Pretty unlikely.
Yeah. So that brings about the question, who is going to put their name in the ring?
I don't know. I think you don't necessarily have someone else lined up. The board will have a decision. Does Bill stay or does Bill go? And I don't actually think you will have a candidate lined up at the point.
Mate,
Bill or Chris?
Yeah. Bill?
Yeah. Oh, now we know who you want to put in there, Trav. That was leading to my bit.
I should cut that out.
No, keep it in there. That's fucking hilarious.
Yeah. I mean, that's the elephant in the room, and that one's done a few rumours.
But I wonder how much of that's, people on the long side trying to create a bit of an outcome for MinRes going forward, to throw develop into MinRes and Bill Beament run the pro forma. But it's whether Bill wants to do that you'd have to ask him, I'd reckon.
Yeah, I reckon probably more wishful thinking from the fundies, like you say, Matty. It's that would seem like a bit of a. I think you'd run a process. I think you would if the board comes to the decision that Chris has got to go, you say, okay, we're running a proper process for a replacement.
I think wouldn't you? Like, you don't have to, do you? But like by shareholders, would it be like you would have to actually run a proper process,
not necessarily,
or not? Or you don't have to.
I just think this is a board that is under pressure to prove that they're doing the governance by the book, and I think governance by the book in this instance is not to have some anointed person run the pro forma. It's actually to sort of source the best candidate from as far and wide as you can.
Yeah.
I also think, Matty, to that question, I remember reading a bunch back, it's about 10 years ago, when Uber had a debacle as well, famous founder leaving. And what stood out in the reading there was that the person coming in has a lot of power by drawing out the process. MinRes is in pain, and it's not a good look for them. So for them negotiating their own comp package, those sorts of things, their incentive structures, once they get in place, not signing the dotted line, in 1 week's time, hypothetically, is a smarter way to kind of go about it for them. And, on the flip side of that, they'll be strongly incentivized then to have the best outcome for MinRes and themselves, whoever that might be. It's just a side thought on the topic there.
Yeah, I wouldn't rule it out completely, but something is going to have to happen. But to make that happen, that's a lot of that ain't a next week jobby.
Exactly.
You got to roll something. You got to do a scheme or whatever and actually implement it. Like, it's not a. That's a. There'd be. And that's the thing. There's a lot of ifs here. It's all like it's allegations. It's nothing's been proven yet. Nothing has been decided yet. And there'd be a big interim period before something like that would be able to happen, because there's so many moving parts to make it that way. So it's but as we said, this is completely separate to the weak prices and financial pressure. Like, two separate issues in a way.
Yeah. It's the management premium's gone.
It has, yeah.
I think we might even be getting ahead of ourselves. The better question to ask is, should Chris go? Does he need to go? Does the board need to send him on his way? Or does it depend?
Yeah, my view with everything that's come out is that him leaving would be the right thing to do. I mean, like, who am I to kind of comment on what Chris Ellison has built? He's done a phenomenal job, but if you're picking to back a founder-led company or not, I'd always go, out of the two, always go founder. He's done a really incredible job, but I just think everything that's kind of come out and how damaging it's been for the company. And again, it's that point of the allegations put forward. So if they are proven to be true, that it was money that would have been profit of MinRes went into the pockets of that Far East entity, then I think the outcome would be that he has to leave. But, with the caveat of that has to be proven and, that needs to be presented to the market.
Yeah.
Matty, what do you reckon?
I completely agree with you. Essentially, like it's innocent until proven guilty, but the timeline to prove these things is usually very, very, very elongated. But will they make a decision to retain him during that process and try and outweigh the potential, PR that has on the company? I would think not.
The one thing I'd add in there is that what's been reported is that he went to the ATO, essentially in admittance that this had happened. So it would just need to be that those documents are shared so people can see, like ASIC and others can see what happened. Like these things, like you say, generally do take a long time, but it does appear from what Neil's sort of reported at the Fin that a lot of this has sort of been written in stone already in the past. So again, we're in a bit of the dark on that one, but that's kind of how I see it at the moment.
Was the latest one, the New Zealand side of it, was that disclosed to the ATO as part of your set, or was that just the Far East side that was disclosed to discussed with the ATO?
From how I understood it, that wasn't included in the previous docs because that didn't have the same tax avoidance nature to it. It was just dealing with a MinRes subsidiary.
Yeah. And this is what happens when all the outlets are hyper focused on this, except the West, as you said, but that new things keep coming up.
100%. I think that's the fear you have as a shareholder, the board, blah, 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 is the moment the spotlight is shone on some things, you worry that this is the tip of the iceberg, and what's beneath the iceberg is more stuff that can surface. And that's been the pattern so far since the first kind of investigative piece from Neil, is like every day or every 2 days, there's something new that emerges. And I wouldn't be surprised to see more come out, and I wouldn't be surprised to see the severity of the things that come out escalate.
Yeah.
Mm-hmm. So I think the last thing just to sort of pass comment on is how proxies and major shareholders will see the situation. So the super funds, obviously a big deal on the ASX, were holding circa 30% of the business. And the chairman, James McClements, has been reportedly going around speaking to the institutional shareholders, the likes of L1, Aussie Super, as we touched on earlier, Airlie are there, and just trying to ease their fears over the governments within the business. Also had been reported a couple of months ago that Ownership Matters, they hadn't been happy. They'd spoken out in the past. They're, of course, a big proxy advisor. And in and amongst the dates we spoke about with the quarterly, the timeline the board has put on themselves, you've also got the AGM coming up on November 1st. So I think you'd be paying pretty short odds that there'd be a fair few votes against a couple resolutions. The ones that kind of stand out is the adoption of the REM report and the approval of a grant for the grant of securities to Chris Ellison. This is a way for shareholders to air their discontent with the business. Ultimately, that voting against these things might not lead to a huge outcome, but it'd just be kind of interesting to see which way the proxies are voting, and therefore the institutional shareholders are voting on the matter.
Yeah, I actually reckon that the performance rights to Ellison will get withdrawn before the AGM. I just think there'll be an amendment.
Could be on the money on that one. I don't think it's a good look.
Yeah. The other thing I just want to say to them, any of the money miners, if you've got any information that we should be aware of, feel free to send it through to us, gc@moneymine.com, but be very curious.
Absolutely. I think we'll wrap that one by saying Ali GC is a shareholder. Ding, ding, ding.
Ding, ding, ding. We'll strictly fact check it.
Absolutely.
Right, Trav, next up, Siren Gold, mate. What is going on? Go the All Blacks.
Go the All Blacks. Yeah, Siren Gold there, an ASX listed, New Zealand gold kind of exploration hopeful. It's the second time in 2 weeks that Siren Gold has disclosed that a superior offer has come on their table just hours before a shareholder meeting to vote on an agreed deal already. So in this case, both times it's been with Rua Gold, but the story gets interesting because I might even end up making my way to the shareholder vote this afternoon at 3 p.m.
Oh, it'd be rude not to, wouldn't it?
It would.
I'll do the edit. It's all good.
And the Siren shareholders, they're scheduled to vote on a transaction with this TSXV listed Rua Gold. The only problem is that Aussie super-backed Federation Mining wants them to do a different deal. The whole conundrum actually reminds me a little bit of the battle for Leonora, where there was a hostile kind of scenario for the Leonora assets. And at the time, it appeared St. Barbara management were pretty wedded to selling to Genesis instead of Silver Lake, who were publicly disclosing that they wanted to potentially pay more. It was still conditional. In this case, Siren Gold really wants to sell their Reefton project to Rua Gold. Meanwhile, Federation Mining wants them to keep it and instead be the vehicle that kind of RTOs Federation to list onto the ASX. And this is particularly interesting because Federation Mining isn't listed themselves. So unlike Silver Lake and the precedent I just mentioned, Federation, they can't exactly put out an ASX announcement about their bid. Instead, the details have found their way to the AFR twice. So it appears to me that deal makers on the Federation side are frustrated at the lack of engagement from Siren, and the media is the way to put the pressure on them.
Oh, that old playbook, eh?
That old playbook.
Been around forever, will be for the rest of time.
An initial deal with Rua was agreed, then kind of 2 weeks ago it emerged in the AFR that Federation had an alternative deal penned to Siren that they weren't getting much engagement on. Then hours before Siren shareholders were actually meant to vote on the deal with Rua, it appeared, had lifted their bid, and the Siren shareholder meeting got postponed. I imagine that the lift was sort of to butt out any chance that the other deal was a bit better. And now it appears Federation has also lifted their bid, but Siren's board is kind of adamant that the Rua transaction's the better one, and they kind of refuse to engage or postpone the vote, which is happening today, as at the time we're recording, this podcast.
So what are the two? Explain the two bids. Which one's different, better, worse, shitter, good?
In a nutshell, the best bid from Rua Gold, which is the one being kind of voted on by Siren shareholders at 3 p.m. Perth time today, would have Siren selling their Reefton project for about $20 million in cash and mostly scrip in Rua. Effectively, Siren would end up owning 30% of Rua Gold for offloading their Reefton project, but they'd still retain their Sam's Creek project. The latest bid from Federation, on the other hand, though, it would be an RTO where Siren shareholders end up actually owning 17.5% of the pro forma. That includes Federation Mining. And Federation Mining, that's like a much more advanced. They've got reserves, they've got development down to the ore body. They still need to build a mill, but Aussie Super's there and can kind of write a check to help underwrite the capex required to actually see that through.
Yeah. So what do you think they're actually not entertaining this Federation deal, which sounds compelling?
Yeah, I think the compelling part of the Federation deal is like 17.5% is a pretty big uplift from where the first offer that was sort of leaked was. It's like a 70% uplift, but it's kind of the vehicle, like Federation being RTO'd, having Aussie Super sort of back it, having a pathway to actually be in production in this kind of gold market's kind of interesting. I think you can eat your heart out with theories on why it hasn't been entertained, and a lot of sort of common sense theories might be the right theories to go with. The board is putting forward the conditionality of the Federation offer as a reason, one of the reasons why it's not up to scratch. But like every offer is conditional on due diligence, of course. And I think what Siren's board should be doing right now is deferring the vote with Rua Gold by call it like a month, then give Federation like 2 weeks to conduct their due diligence required for their bid to be unconditional, to allow its offer to reach, to DD to be done, becomes unconditional. And then once you've got a deal capable of being, unconditional or comparably conditional between the two, let shareholders determine the best one on the table. Because, the thing that stands out to me, a bit like dog bowls, is in today's announcement, you can see the board recommendation. They've based it off the recommendation from only 3 of the 4 directors. They say MD Victor Rajasuriya was sidelined from voting because of his material personal interest in the matter due to his holding of performance rights.
In Siren.
Now, Victor, he does have 13 million performance rights, but I don't know if I've ever seen a director idled from the decision because they have performance rights. This is probably the first time I've actually seen that.
You'd think they'd want to make the better decision. Like they'd be more incentivized to make a good decision.
Well, performance rights vest on a change of control, and in the case of the Rua transaction, there's no change of control. So like you could come up with a defensible theory for maybe why there's a conflict, but I just don't think it's a very sensible conflict to point out, or actually I think it's quite hypocritical because if you look at the just the annual report of Siren, you can see that 2 of the 3 remaining directors that were part of the group that said, yes, we recommend the Rua transaction, they're clipping about $200,000 each in related party transactions. One of them gets the money for rent, admin and marketing services, and the other one gets it for consulting services. So the cynic in me can't help but wonder if those directors are truly without conflict as well. That seems like a conflict of interest to me, to want to retain that annuity that comes in to you as a result of staying in control. So
so correct me if I'm wrong, this vote that's happening now, there would be proxy votes that have already gone in for that vote, but there is new information on what alternative deal is out there. Is that right?
I think that's the big point is the vote, like for people who are voting on the approval at the shareholder meeting, they, at the time that they've submitted their votes via proxy, keep in mind, not many people actually rock up to a physical meeting. They normally submit their votes before the deadline to submit them via proxy, which is normally 2 business days before the actual meeting in person. So anyone that's done that would have no information of the best deal on the table from Federation. So they've approved something without knowledge of what the best alternative actually is. That's why I think the responsible thing of the board to do is actually to postpone it so shareholders have a better understanding of what the 2 options are, and let them vote with their own capital rather than, have it's in their own language, a conflicted board telling you what they should do.
Yeah, right.
Yeah. Anyway, I'm going to go to the meeting and see what happens.
Wonder if there'll be pastries there, or is it just going to be the Blend 43 and Bickies? Don't know. Let us know. I'm always keen to know at votes and AGMs what the food is.
I will let you know.
That's my big ticket item. Big ticket item.
The food might be getting thrown from side to side. We'll see.
Look forward to hearing what goes on there. Right. Next up, Paladin. Bloody down 20% today in early trade on the back of the quarterly results. A recent ding, ding, ding. I bought the dip. Full disclosure.
Bought the dip. Interesting. Tell me what you saw here that that you thought maybe the market didn't see.
I was like, oh, geez, it's down. It must be as cheaper than Friday. So remember, a lot of the numbers we'll go through here are on a 100% basis. Remember, Paladin only owns 75% of the Langer Heinrich mine in Namibia. Other quarters owned by China's CNNC. So they were guiding for FY25 on a 100% basis, £4 to £4.5 million of U3O8. At a plant recovery of 85 to 90%, but you can see what they've produced this quarter. It's hasn't really hit the mark yet, so they only managed to produce 640,000 pounds, and the plant recovery was at 69%. So I think that's been a big driver for the market reaction today. So, and look, they cited variability in the stockpile ore grade. So remember, they're just processing the old stockpiles. There's no mining going on here. Delayed commission in the second classification circuit, lower than anticipated tailings water recovery, and a couple other things, additional maintenance for the screens and filters. So look, and yeah, you look at how much the costs lifted as well. They were up to $42 a pound, but lower output, poor recoveries. I'd bet $1 million every time the costs are going to be higher. Usually
than expectations.
Always. Yeah. If you produce less pounds for the same amount of work, you're going to have higher costs. So that's it hasn't. Because they also fell below the required 1 million tonne of crusher throughput for the quarter. That's what they sort of need to be hitting. They did indicate that crusher upgrades did take place that eliminated some previous bottlenecks. So, because if you look at the cash flow report, you can see sales revenue was 24.8 million for the quarter, but you look back at the June quarterly, it was flagged then. That was the partial advance payment for the offtake agreement for the 320,000 pounds that they shipped on 12th of July, because they announced that at the end of the quarterly and saying sort of that was coming up. So it looks like, from what I could see, they've produced for the last 2 quarters in total of about 1.2 million pounds, but it appears they've only been paid for a bit over of a quarter of it so far, because they say I'm not sure if that, I assume that 320,000 pound was, they got paid and then 25% goes to CNNC as the other owner. So because they sold 600, it says they sold 620,000 pounds during the quarter. I'm assuming the 320,000 pounds partial is part of that, is being included in that, but they've only been paid. They haven't been paid for everything they've sold in the quarter.
Gotcha.
Because that the only cash receipt exactly matches what they disclosed in the June quarterly report. So effectively, they've produced 1.2 million pounds, sold about half of it, but only been paid for a quarter of it with cash in the door. That's how I interpret it.
So the prepayment, they would have gotten the money in the door ages ago for that.
Nah, it said they got it said they shipped it.
Yeah.
On the, I think it was 12th of July or something, and received a prepayment.
The partial part of it.
Yeah, but that prepayment has been included in this quarterly. Gotcha. It was just mentioned in last quarterly because it happened, just a couple of weeks after the end of the quarter. So look, there's possibly around 800,000 pounds still to be paid for that has been produced in what they've got. So, $75 a pound, that's about their 75% share would be US 45 million revenue. Because you look at it, you're like, they're just processing stockpiles.
That's the
and
thing.
they're losing money.
That's 100%. That's literally, I opened the cash flow statement first. I didn't read any of the words in the quarterly, and I'm like, how are they losing money from processing stockpiles?
And it appears so it appears even after it must have to. They don't get paid till it's well after it's shipped. That's what it's looking like. So because they increased their drawn debt from US 70 to 95 million, so they've got 55 million unrestricted cash and 55 of undrawn debt, plus the 95 of drawn debt. So. So there's obviously that chunk of to sell, and then obviously what they're going to produce beyond that going forward as well. So,
and if the deal with Fission completes, I imagine like you're paying transaction costs, all the success fees to all your advisors.
Yeah. So I think it'd be a bit of chunky leakage coming out of that. So and look, because they're still in regards to that Fission deal, they're still waiting on that Investment Canada Act clearance, ICA, they refer to it as, on the back of that national security review that was called. So, because the final court order got approved for the arrangement, but still waiting on that ICA clearance to get finalised. So, I guess the question is, if it does get approved, because they say the disclaimer's in there, it's no guarantee it will get approved, which means the arrangement won't get approved. It's like, how will the pro forma perform? Because as I said, there's no geographical synergies with it at all. Like for the Paladin Fission, they're obviously getting hold of a development project in the Athabasca Basin plus the other stuff, but that's the key thing, is that the PLS project. They will have cash flows coming in from Langer Heinrich, but a big development project is a big capex bill and a lot of permitting and a lot far away. But and look, they are scheduled to start mining at Langer Heinrich, I think 2025, because that'll take them up to, hopefully they're aiming for £6 million a year.
Too much capex to spend to kick off that mining.
Don't know.
Yeah, because I'm thinking in my head, are
Probably
they
a cutback or something.
Yeah, speculating here without knowing the detail. But if cash is skin, I know they've got the debt and stuff, but maybe the fission deal completing is also a catalyst. You can maybe raise some money and say you're going to spend it on progressing, Fission's PLS at the same time as allocate some of it to your cutback. And
and look, it's all price dependent. I think they've got £20 odd million contracted out to £23 million of production contracted through to 2030, but they're going to, what's that? 6 years away. Their share is going to be 4.5. So that's pretty much most of Paladin's share contracted, I think, at £6 million a year.
Maybe that's also part of the reason they're the fourth most shorted stock on the exchange. So that's pretty hefty, and I'd be interested to see after today whether some of them are covering. Using that, you said down 20%, sort of bounce between there and 15%. So I wonder if there is a bit of buying back. But yeah, wonder if the thesis was also in part maybe a capital raising. Again, like you say, Trav, I'm saying that without going too far into the weeds on this one.
Yeah, but it's just that it's the age-old, you speak to the people running these companies, the age-old playbook is get your uranium market cap as big as possible to get the ETF inflows. And because that's what drives a lot of this market with these, when you've got these uranium, you've got such limited amount of producers around the world in a sector. What is there, 8, I think, been told? 8 people producing uranium around the world.
That are listed that you can buy.
Yeah. So it's not like, it's just it's such a different commodity in that sense for the ETFs that want their exposure to production. So, and that's just what until there's a shitload more coming on, that's going to be a lot of the driver behind equity movement. As uranium price and fuck ups.
As Kaylee kind of told us on Friday's episode as well, maybe a strategy that more miners in different commodities should utilize as well. Hey,
what's that? Have less of them.
Yeah, just merge and by a scale attract more generalist funds. And grow that way. It's not a sort of feature completely unique to the uranium market, although the ETFs in uranium land are pretty chunky. But that lower bound threshold for the big money managers around the world does chalk off a lot of the mining companies that we talk about.
I think when that happens though, like let's say the ETFs drag your share price beyond where true value, intrinsic NAV is, that you as a management team, you've kind of got to backfill value now through M&A. That's actually accretive, which is also hard to do when the whole sector is sort of buoyant. You got to buy stuff that looks cheaper and backfill value, because flows don't happen forever. In fact, the generous flows, as fast as they come, they kind of go when the theme changes as well. So you cop it. The night is right on the upside, but then you're vulnerable when the flows either slow or reverse. That you're particularly kind of
I think
sold off.
And I think it's and I suppose when you talk, it's from the underlying, when you say the theme, like the underlying theme is like, what is your bet on uranium and nuclear right now? That's what Paladin is. And I guess with all the recent news about the whole data center thing wasn't really in the initial thesis a year ago. Now that's sort of being added on top of the structural supply deficit that everyone keeps talking about. So it's going to be a very interesting year in the yellow cake, I think. I've never stuck to enjoying something for so long. Fucking love uranium. I've used to have ADD. I'd be like, I'm onto this now. I'm back on the rare earths. But anyway, another company with yellow on the logo. Look at this, yellow. Westgold. Not mining uranium, FYI. But they could if they want, because they've just increased their bloody balance sheet strength, upped it by $200 with their existing lenders. 300 mil in the bloody war chest now. So
what are they going to use it on, Matty? That's a big question.
K-Drill. I reckon they're going to give a shitload to K-Drill for organic growth. K-Drill are punching some holes in up at Meekatharra for Westgold. Punching.
Using guns to punch?
Using Ryan's hands. Like he's like they got the RC going. He's like pre-collaring, just beating the shit out of the ground, just manhandling the district. The legend that is Ryan O'Sullivan. Yeah. Westgold's future now in the hands of Ryan O'Sullivan. I've never felt more comfortable as an Australian citizen, really, for anything. Bloody, that's a tick from money of mine for Westgold.
I wonder how they set these records of like meters per shift, but
Ryan's violent pre-collaring, just beating the shit out of the ground, and it's just then she's just
it's an efficiency that can't be unlocked through mechanical machinery.
No, it can't be, Travis.
They're at IMARC as well.
Oh, mate, don't forget, ladies and gentlemen, before you engage K-Drill for some RC and diamond holes, just like Westgold have made a good choice, go have a beer with this good-looking guy. Have a look at Drubo. You know why he's smiling? Because he knows there's a few schooners on the way over in Sydney. Make sure you say good day to Druba and the team at IMARC. We're not going, by the way, even though we're on the website, I just found out.
Really?
Yeah. We go to the on-air page. It's like a big thing of us. No wonder everyone's been asking if we're going.
That makes a whole lot more sense.
That makes oh, God, I'm so used. So, yeah, that's extra. The word's going around. What's the money for Westgold? Pantoro keeps getting a mention. $700 million company now, Pantoro, their market cap, since they've had the recent run on the gold price. Obviously got the synergy with the Higginsville mill down that way. Even though Pantoro got their own mill, but there's probably a lot of other potential stuff of Pantoro's to feed into the Higginsville mill. Like there's obviously, I know they've probably been doing, I would assume they've been doing DD on that for a while. I don't know.
Don't know. Yeah, I think that one makes sense. Like the facility was interesting because it basically said, we got very little detail on the terms or anything like that, but it said that it expired, if not drawn down, 30th of June 2025. That, to me, there's probably a commitment fee involved in getting one of these. I don't think you get it unless you have a plan to draw it down in the, in the like 6 odd months you've actually got to use the thing, seven odd months. So
why would you go to the effort?
Yeah, be interesting to see if they're going to pay like in whatever form $1 billion for Pantoro.
I don't know. Yeah, sometimes the more you talk about things, the less chance they've got of happening. But
maybe that's a new technique for us. The other one that's interesting that's been on a bloody run is Astral. Have a look at the bloody spark chart of Astral. That's she was up another friggin' 7% today because they got their Mandela projects that's just north of Higginsville. So it's sort of, you'd say it's closer to Higginsville than Lakewood.
Yeah.
But that's what is it? 1.2 million 1.27 million ounces at 1.1. So big pit. But yeah, it'd be interesting. That's, I think, what are they capped at? 120. 120. Yeah, it's on I noticed on the spark chart, the thing here, 179. 179 now.
Wow.
Yeah. Wow. So you'd have to pay up a bit for it. But it's a, Greenfields project. So that'd be another one I'd have my eye on there. See what happens.
Yeah. New person in the district in, Westgold. So anything's on the table, Addy.
Or K-Drill might just find a shitload of
exploration. Could make sense too.
Yeah. They're up the north at the moment. Wait till they start punching holes in down the south.
Yeah.
Holy snap and duck shit. Right. We might be seeing another little deal coming up here.
What's your prediction?
The detectives are bloody, it's not too hard to figure out, I don't think. You got Brightstar and Aurumin both in trade null. Oh, Brightstar's actually suspended from quotation on the back of going into a trading halt end of last week, but it was around speeding ticket. Wasn't around any transaction or anything. But then Aurumin just went into trading halt today in relation to commercial discussions with respect to a potential joint venture relating to the Sandstone project.
Okay.
So
JV.
Yeah. So I would now. You'd think the logical player is Brightstar because of obviously the scheme of arrangement with Alto, the gateway side of the deal, transactions being completed. The 19th of November is when the Alto deal gets scheme gets voted on. So it just might be the next step towards sandstone consolidation, possibly.
Yes. They always had that. Yeah, the little bit of tenure where the mill used to be in the sandstone district there, and they've got like a mineral resource that has kind of historically kind of copped a bit of flack for being a tricky one to mine because it's so skinny and so deep.
Yeah,
but
I think it's only about 100 metre strike length.
Yeah.
But it looks like, I looked at the hits, it looks actually, I haven't gone too deep into it, but it looks like it's got a bit of thickness to it. I think it was 1,300 ounces per vertical metre. So it wasn't like there was, it's
I think that the resource
8.4 metres at 9.3 grams is one of the hits.
I could be wrong about this. I'm pretty sure when I went to the weeds on the resource, this is like back in 2020, the pit shells were optimised at a $3,500 gold price, which is finally past that. So.
Yeah, she's up to 4,000 now. Chuck 4.5 on it.
So it might be mineable now.
But that's the thing. That's what like these a lot of these historic things at $4,000 an ounce. Like everything's like right. Where does gold exist? Because they got they got 881,000 ounces at 1.5. Bit over 2/3 of the resource is underground. About 3/4 of the resource is inferred too. But look, it's very low grade for an underground. But as I said, it does look like it's got a bit of thickness to it. So, God, 1.6 gram underground might bloody get a look in these days at over $4,000 an ounce. But I would assume this when they're talking JV arrangement, I would think it would be for the satellite pits, which you can see in the resource table. There's a lot of them. There's 11 resources they've got in that sandstone project for 307,000 ounces, which are two-thirds indicated. So there's that old 500,000 tonne per annum mill that needs a bloody good refurb or knocked down and completely replaced. I think from what I saw, it last operated in 2010.
Troy Resources.
So she'd be a bit of a rust bucket by now, but it is permitted to produce for a 500,000 tonne throughput. Does have associated infrastructure, but I imagine there'd be a lot of work to get that making gold again. So anyway, probably just might be there's 11 pits MMS can rip the arse out of. Yeah. Bloody good job for them.
If they're on an ML, for example, like that kind of unlocks the ability, like a processing location in some ways for Brightstar's other regional stuff.
Maybe not like for what their other regional stuff. You wouldn't be.
Well, they're going to have to.
They've got to build. They've got to either.
Where's that plant got to go?
They either got to bloody buy a Kirkalocker or build a 2 million tonne mill at Sandstone to feed the Alto stuff into. So this one doesn't really. Might be just a shorter term option for a bit of cash flow to start ripping pits out. But when we say shorter term, takes a while to get these things approved. So anyway, we'll wait and see.
I think to the point on the gold price running and then all these deposits just becoming sort of in the money, if you like, only works for a period of time. Like we've talked in the past about that.
While the gold price is up.
Yeah, I mean, we talked in the past about how gold costs, mining costs, just track it. So sooner or later, I'm at least of the view that gold mining prices will get there. Like the margins don't just blow out and stay out indefinitely on gold. Like they haven't historically. Maybe they will for quite a while. But I think we put a chart in the director special just last week, and you can see over decades that the costs track the gold price that they have. And I think we're in a period of time where gold miners can make a good bit of money because the price has spiked a lot more than what the costs have. But I don't think that sort of tends to last forever.
The only rebuttal to that would be is if I think it'd be different when all commodities are lifting. We've seen lithium, nickel and all that fall off the cliff, and you're thinking what's your main cost is the mining of it. So if other commodities are stressed, that one's up and you're still trying to get – an underground mine isn't contractually priced on what the commodity price is. It's just
and gold price is international and the costs are much more local. So it's not the same everywhere.
And just remember the cure for high prices is high prices because there's margin in all these marginal things now. Well, guess what? People are mining all of these little satellite pits, which creates a lot more sort of selling pressure for physical gold.
Yeah.
Will the market absorb all that or, does it just sort of Like, yeah.
I think on this size of scale, like, do you think a heap of little satellite jobs in Australia are going to affect the international gold price?
100%. This
You
is
reckon?
like, this is what happens. This is like, there is no period in history where you have the fourth quartile of the cost curve making margin for 12 months, 24 months. It just doesn't work that way. You incentivize new production to come online higher on the cost curve, and that new supply, meets the incremental demand at some point, and then you get price balance again.
I think that people are out there that would fight you on the supply-demand dynamics of gold pricing and how it's a sort of
started some fights,
different type of asset and these sorts of things.
Yeah.
I'm not going to be the one that gets into that. It's a bit of a...
I'm not saying the marginal ones in WA alone. I'm saying the marginal ones globally, and I'm saying the gold producers who have a bunch of marginal pits all of a sudden they just start feeding that through the mill as well. Like, because there's extra cash flow at elevated prices. Yeah.
You see it in every commodity. Like we spoke about last week, that sort of difference in people stealing copper when it jumps from $9 to $12, US $1,000 a ton. That's in a sense, a different type of marginal supply.
Yeah.
I think it's a real thing. People realize the opportunity.
Well, the only probably guarantee I can give is that it's an Australian earthworks and haulage site clearing jobby coming up out here. Like, that's like, we can argue on supply and demand all you want, but that is as certain as death and tax that Reece is going to go bloody... Mate, he can turn an absolute shit bucket of a side into looking like the F3 from Newcastle to Sydney. Like...
Interesting.
Mate, have a look at him out here. Reece Patolny on the bloody dozer out right enjoying the sunshine of the Salt Lakes. Mate, he's... Oh, look at that for a highway.
That looks impeccable.
He even makes the salt rust proof. Like, that's how bloody good he is. So, site clearing.
You just got to get him on site.
Mate, just get bloody AEH to come and sex up your joint and just make it look like the Rolls Royce of desert. Reece is the man.
Clearly, yeah. He'll can move anything on it then.
Oh, mate, it'll go from the sandstone to the sexy stone after Reece does his bloody work on it. So, mate, good work, Reece. Thanks for just making the world a better place.
Good on you.
JD, speaking of, is this company in a better place now, IGO?
Interesting. It's an interesting one, mate. The quarterly had pros and cons, and I'll run through it kind of quickly. I think the three kind of standout points are that Greenbushes performed better operationally, sort of notwithstanding the lithium price. Nova didn't do so well. It's been a good few quarters now where it hasn't really performed. And the third thing that stood out was that the company has stopped disclosing a bit of info. So no more underlying EBITDA at a site level, no more sort of COGS on Greenbushes. And that lack of disclosure obviously naturally became a real sort of talking point of the quarterly call they put on today. So in a bit more detail, TLEA didn't pay a dividend. Of course, that's the joint venture through which they own their Greenbushes stake due to weak lithium conditions. Not a massive surprise, although Greenbushes unit costs dropped from about 340 Aussie per tonne to about 280. So that was great to see. Although Kwinana prepared for a shutdown through the quarter, that should be complete by the end of this month. And we should see already performance improvements in the next quarterly report. There was a few sort of question marks around how much cash sits in the joint venture and what that's kind of being used for, and questions about why there wasn't a sweep with cash paid out to the holders or the owners of TLEA. Kwinana needed investment. That was one of the reasons. Clearly, they sort of said that 20 million was spent in sustaining and improvement CapEx there. But yeah, I think a lot of people will be scrutinizing. It was sort of slightly better quarter on quarter, the tons that came out of the hydroxide plant there. But, we're talking from a very, very low base. On Nova, there was lower mine volumes and lower grade. That meant it just didn't really perform. Unit costs were as high as they've been in quite some time. Forrestania is now on care and maintenance too. And yeah, just to kind of round out on the lack of earnings details, they had kind of pre-flagged this and spoke about it, but it just makes the job for the analyst quite a bit harder. And a lot of the numbers you can still kind of get to, they kind of give you enough. It just creates a bit more work. So it's kind of frustrating. The one thing they probably should do is chuck in a waterfall chart. I don't know too many other companies that don't at least put in a waterfall chart. And it was interesting to see the company's rationale for not giving this disclosure was that it sort of simplifies their business and reduces costs. So I'm not personally sure how much effort and money goes into just being able to give a few more details in your quarterly, but maybe it's more than I'm kind of anticipating, and maybe I should give them the benefit of the doubt there. But that was a defense to that I wasn't expected. Just to finish up on where they are now, the balance sheet sort of perspective, net cash is sitting at about $260 million. This dropped off over $200 million because, of course, they paid about $200 million in dividends. That was the FY24 divvy that they distributed. That was a pretty big miss, though, because consensus was sitting around $340 million. So they came in a good bit below that. And to kind of cap things off, the company warned that should the conditions in the lithium market persist, there'd be a drain on cash. So nothing new there. It was just a bit of an ominous kind of sign to leave the report on. Shares ended up pretty flat. I think the good side of Greenbushes and operating better outweighed some of the negatives in the company. But yeah, just a bit of a recap on what's going on at IGO.
There you bloody go. You know, now that Forestoni is on care and maintenance, got my eyes peeled to when Medallion will finalise the bloody deal to get hold of the processing infrastructure there, because I think that was waiting on them to finish final bit of processing on that site. So if it's on care and maintenance
and
now, that
conditional on raising the money required to do it too.
Yeah. So they've had a bit of it. They've doubled since they first announced that. So got my eyes on that. Be good to see another bloody gold copper project going in WA. Go mining.
And seeing the mill just on care and maintenance, get it in use with someone else. Absolutely.
Yeah, mate. There's bloody heap of. This will all come out tomorrow. All me flagged predictions, guaranteed. Be fucking great.
I actually know, Matty, who else could help the guys at Medallion.
Who might that be, Jonas Benedict Dorling?
I might suggest Mineral Mining Services, Grounded, CrossBoundary Energy, Sandvik, CRE Insurance, Greenlands Equipment, K-Drill, MMTS, Australian Earthworks and Haulage, and then they can use a spark chart and just watch their stock price go flying after they've hired the rest of them.
Oh, mate, we've just offered a turnkey solution. Hootaroo, money.
Hootaroo, guys.
Hootaroo. Cheers, bros.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.